Hello and welcome to downtrend Investment. This analysis is for Meridian Mining on the Toronto Stock Exchange as of 31st of July 2026 with a share price of $1 Canadian.52. The full report is on downtrend.ca. A hold on the short horizon. The daily chart is an oversold downtrend, so wait for the tape to turn. But a strong buy on the medium and long horizons. This is a $984 million NPV copper gold developer trading at roughly 0.55 times that study value, with analysts unanimously strong buy at a $3 Canadian.06 target. The core of the case is the ore body. Cabaçal is a shallow, high-grade, volcanogenic massive sulfide deposit, and its 2025 pre-feasibility study is exceptional. An after-tax net present value of about $984 million, a 61% internal rate of return, and roughly 141,000 gold equivalent ounces a year with a fast payback. Meridian is fully financed beyond the final investment decision, carries no debt, and has about 74 million Canadian dollars in cash. The honest offset, it is still pre-revenue and single asset, so construction execution and the dilution needed to build the mine are real risks the study does not remove. You value a developer on price to net asset value, not on earnings it does not yet have. At about $1.50, the market pays roughly 0.55 times the study's net present value. In other words, it is not pricing in a successful build, which is exactly where the upside lives as the project de-risks. 9 analysts cover it, all rating it a buy, with a consensus target around $3, roughly double the current price. On top of the core project, you get several things largely for free. A second high-grade deposit at Santa Helena, an active exploration program, and leverage to gold near a record in copper up more than 40% this year, both well above the conservative prices the study assumed. This is why the short-term call is a hold, not a buy. The monthly and weekly trends are still up, but the daily chart has rolled over into an oversold pullback, down about 30% from its high on thin volume. Price is sitting on support around $1.37 to $1.40. That is a classic buy the dip in an uptrend setup, but it is not yet confirmed. A short-term buyer wants to see a higher low or a reclaim of the 20-day line first. For a longer horizon holder, this is a half-size starter zone, adding the rest as the tape turns. For a trader, patience pays. The risks are the honest ones for any developer. The biggest is funding. Building a mine takes capital, so equity dilution on poor terms is the real threat to the per-share value. The current financing gets it to the investment decision, but not through the full build. Permitting is next. The installation license is submitted but not yet granted, though the preliminary license already is, which de-risks the path. And because it is a leveraged bet on two metals, a sustained fall in gold and copper together would widen the developer discount back toward the $1 Canadian.05 bear case near the 52-week support. The roughly 74 million in cash and the granted preliminary license are what put a floor under it. Now weigh the risk against the reward. The bull case is roughly 130% above today, the base case, the most likely about 81%, and the bear case a fall of about 31%, so you are risking about 31 to make 130. So, our call on Meridian Mining on the Toronto Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by downtrend Investment at downtrend.ca. The link to the full report is in the notes below. Have a great day.